Tesla reportedly postponing its planned robo-taxi event. The delay, which would push the reveal from next month to October, leaves the stock as one of the biggest losers in the S&P for the week, although it's still doing quite well for the month. Our next guest calls it a non-event, believing the EV maker stock is going to double. Joining us now, Deepwater Asset Management's Gene Munster. Gene, why is it a non-event? I mean, if there's any history here, it's a history of delays and of unfulfilled promises when it comes to full self-driving.
The history is the reason why this is a non-event is that they occasionally postpone their actual events. Keep in mind, Elon kind of did this off the cuff, announced this event out of a reaction to a Reuters report about a discontinued low-end vehicle. And so I think that was hastily planned, but they typically or sometimes delay these events, but they always, and I choose that word carefully, delay product announcement or product launches and the subsequent ramps. And if you look at that breadth, is eventually they will get acceleration from these products. As far as FSD, that undoubtedly is still this question that is begging. That's been delayed. Elon famously in 2017 said that FSD would be available by the end of the year. And at their first AI event, he talked about 1 million robo-taxis in 9 months. So it's a non-event, David, because this is a very well-traveled road. And ultimately, the reason why the stock is rallying back here is investors are asking a simple question. Do they believe that transportation eventually is going to have an autonomy angle to it? And what is Tesla's position? And my view on that is absolutely, in the future, transportation will be autonomous. And I think Tesla has a pole position in terms of capturing that opportunity.
So it doesn't matter as much as whether it's coming. It doesn't matter as much as when it's coming, Gene. I mean, I would think for a discounted cash flow model or anything else you want to sort of try and determine value, you've got to have some date in mind where this is going to actually begin to contribute to revenues and cash flow.
You do, and it's probably 27 or 28, and I just want to put some context. You mentioned earlier about the potential for this stock to double. Right now, the company is going to do about $100 million in revenue. By 2027, that will be about $100 billion. By 2027, that should be $170 billion. An 8.5 multiple on that, that's a similar revenue multiple that Apple gets, kind of yields a double from here. But I think that's kind of the year that investors should be focused on is 2027, which means we're probably a year away from fully discounting that. But keep in mind that 2027 benefits from 2 factors. First is accelerating demand for vehicles, whether it's for consumer-owned vehicles or fleet vehicles. And separately, and more importantly, of course, is margin expansion. I believe that autonomy is a killer app when it comes to transportation. I think that they will have higher margins because of that. So answer your question, David, I think it's 2027, and I think that's going to get progressively discounted in the stock over the next year.
What about the humanoid robots? How do you factor that into the valuation, total addressable market, and potential for profitability, or is it just too early?
It's not too early for investors who have a 5-year time window. And think of this as the AI cake. There's 3 layers to it. The first is just FSD. The second layer, I said, that's probably 26, 27. The second is fleets. That's probably 27. And then the frosting layer, the sweetest layer on that is Optimus. At this point, it is an eye roller, a potential punchline of a joke for many investors, but Optimus does hold an opportunity that could create more value than the collective business altogether. And when you think about the concept of really automating work across the board, I think that that is a massive opportunity. This is still an $800 billion company. There are $3.5 trillion companies that I think are doing less to advance humanity. And so I think that Optimus should be part of the conversation, although it's not today.
Yeah. It's also doing a lot of planning at SpaceX, apparently, for life on Mars. Gene, while we have you, just a quick diversion to Apple, because it's a name, my God, you've spent so much time on our air talking about over these last years. Give me a take sort of, on the current quarter and the cycle and what lies beyond.
Current quarter, the street's looking for about 3% growth. That's for the June quarter, I should say. Because the strength in China in the last 2 months, you should see a little bit of upside to that, call it 4% growth. We'll see accelerating growth again in September, December, and calendar year next year. As far as the cycle, the question comes down to is how potent are these AI features going to be? Samsung this week revealed some data around their Galaxy AI. They said their Circle to Search AI feature, 55% of users are using that on a weekly basis, and their annotated image is 23% usage. That is far more than what they expected. The bottom line is this is going to create a boom in demand for Apple devices. It's going to take probably 6 quarters to build that momentum, but this is probably the most exciting 6 quarters of iPhone that will be emerging related to really opening up AI to the masses.